Today's lesson will be Chapter 6. We're going to look at process costing, and we're going to be using the weighted average method today. All right, you should be able to see now exercise 6-9. And what we're going to be doing is this time we are going to be preparing a cost of production report or part of one in this exercise. In the next exercise, we'll do the entire cost of production report. But we're going to be doing the top half of the cost of production report using the weighted average method, which is a little bit different from the FIFO method. We're going to also, in this problem, be dealing with some beginning work in process inventory. So there's going to be some work in process inventory that comes from the last period that is brought forward. When you're using the weighted average method, I've created a little notation for you here in bold that says the weighted average method counts prior period work and cost in beginning work in process inventory as if they belong in the current period. Now that is the main difference between the weighted average method and the FIFO method. You remember when we did the FIFO method, we had to go back to a prior period and count the cost for the prior period. They were not included with this period's cost. But in this method, the weighted average method, we're going to count our beginning inventory as if it happened in this current accounting period. In this problem, we're going to be Jackson Products. And what we're producing is a barbecue sauce. And they have three departments that they're working with: the cooking department, the mixing department, and the bottling department. In the cooking department, all the materials are going to be added at the beginning of the process. And so that's important to note here. The materials are not going to be added all throughout the process, but they're just going to be added at the beginning of the process, which will start in the cooking department. And then from cooking, it's going to go to mixing, and from mixing to bottling. We're probably going to be looking at the mixing department, although they really don't tell us which department we're working with. When we are using process cost accounting, you would be keeping up with work in process for each one of the different departments. So each department has its own separate work in process account. So I'm assuming that we're going to be just the cooking department. In other words, we're going to be one department. They don't really state what it is, but it's my belief that it's the cooking department that they're talking about here. For production, what they wanted you to know is that you had some beginning work in process that was 60% complete. And you see there's an asterisk there beside of that, and that asterisk is followed up with that 60% complete with respect to conversion cost. Remember, your conversion costs were your direct labor and your factory overhead cost. So this 60% complete is just about conversion cost. All your materials are added at the beginning of the process. So all of these beginning inventory items had all of their materials added. They've also given you what was completed and transferred out. You completed 80,000 units, and you also transferred those units out. The units that were left over in ending inventory as of July 31st is 80% complete with respect to conversion. Because remember, your materials are already added at the beginning of the process. So my ending inventory materials have all of those associated with them. Now, what they wanted you to do is to prepare a physical flow schedule for July. And the physical flow schedule is the same thing as the whole units schedule that we did with the FIFO method. So we start with our units, and our whole units are going to be beginning inventory units that were whole units of $10,000 that we got from the information above. So we have whole units. We don't know how many units that we've started or received. You would have to find this information here. So this 85,000 is not given. So what I'm going to tell you is what I've told you before. Start with the information that they did give you and plug it in, and then work backwards to find the other information. So 85,000 units wasn't given to you. This 95,000 units was not given to you either. So we're going to hold off on these two. We're going to put in what we do know, which they did give us 10,000 beginning inventory units. Remember that you're going to reconcile these whole units. In other words, this part down here is a breakdown of some further steps of the same information above. So we're going to start with our beginning work in process, which was given to us at 10,000 whole units. We know this is a given part of the information. We do not know the units that we started and completed, but they did tell us the units that we transferred out. Units completed and transferred were 80,000 units. So we were given this 80,000. And so we could work backwards to find the units that were started and completed. By working backwards, what I mean is we would take the 80,000 units that were transferred, subtract out your beginning inventory units, and that tells you what units you started and finished during this time period. So this 80,000 was given to us. The ending inventory was also given to us. The ending inventory and whole units was 15,000. So if we know that we had 80,000 units transferred and 15,000 in ending inventory, the total of these two added together will be the total units that you are going to assign cost to. So 95,000 units are the total units to be assigned cost. That 95,000 is plugged back up in here. Remember, these two reconcile each other out. So if you can find this, you should know what the answer is to this. And then you can work backwards to find the units that you started and completed. This is what we refer to as a physical flow schedule. In ACC 121, they titled it whole units. So to tie in what you learned in ACC 121, I'm going to continue by putting whole units on here so you'll understand where these steps come from. And so I've written in a notation for you to help explain what's going on here. The whole units are going to be calculated the same way, whether you use the weighted average method or the FIFO method. So these whole units are exactly the same way. We calculate them the same way that we do for the FIFO method or the weighted average method. What will be different between the weighted average method and the FIFO method is how you calculate equivalent units. And the equivalent units using the weighted average method, which we're emphasizing here today, the weighted average method consists only of our units that we transferred, which was 80,000 units that was given, and the ending inventory units, which was also given at 15,000. So in the second part of the requirements to this problem, they want you to prepare an equivalent unit schedule for July using the weighted average method. And this is new to you, but the weighted average method only, when you're calculating equivalent units, only consists of the units you transferred. So you start with the units that you transferred, which is 80,000 units. When you transfer units out of work in process, the 80,000 units are finished with respect to materials, and they're also finished with respect to conversion. Our ending inventory units are finished with respect to materials, but they're not finished with respect to conversion cost. So our materials equivalent units is calculated by taking the 15,000 whole units in ending inventory. It's 15,000 whole units in ending inventory is multiplied by 100% because all the materials were added at the beginning of the process. So all 15,000 units got all materials. But of the 15,000 units in ending inventory, only 80% were finished with respect to conversion. If you multiply the ending inventory units of 15,000 times 80%, it will give you 12,000. 12,000 is your conversion equivalent units for ending inventory. Then to determine the total equivalent units for materials, we add the units transferred and the beginning inventory units together, which means that the total materials equivalent units is 95,000. For your conversion, all of them were finished that were transferred out with respect to conversion, but only part of the ending inventory units were finished with respect to conversion. And that was 80% of the 15,000, which is 12,000 units. We would add the two of these together to get the total equivalent units for conversion. And so that's the main difference between the FIFO method and the weighted average method. The whole units are calculated exactly the same, but when we get ready to do equivalent units in the weighted average method, we only use the units transferred and the ending inventory. Now, part 3 is just asking you to kind of go work backwards and calculate what the FIFO units beginning with the weighted average equivalent units are. So this is just asking you to work backwards. And so if we know what the weighted average equivalent units are, which we calculated above, I just brought those down. And if we know what our beginning inventory was, that was $10,000. Or excuse me, 10,000 units was in beginning inventory. Our beginning inventory, they gave to us up here at 10,000. And for conversion, our beginning inventory, you'll remember it said that it was 60% complete with respect to conversion. So notice what I do here is I take 60% of the 10,000. And that's how I get 12, that's how I get 6,000 here. I was pointing to the wrong thing there. So this 6,000 comes from your beginning inventory units that were 60% complete with respect to conversion. And so they subtracted the ending inventory from the equivalent units that we brought down for our weighted average method. And that will leave you with the FIFO method, materials and conversion equivalent units. Now, I didn't like to just leave it like this. I just wanted to prove it to you. So to prove it to you, I went back and recreated the top portion of the cost of production report for the FIFO method. And so I just wanted to prove this to you. You remember your whole units are going to be the same as they are for your weighted average method. Whole units are calculated the same way, whether they're weighted average or the FIFO method. So I took these whole units here and just copied it down to prove this. And when I copied them, I put it in here. For the FIFO method, the equivalent units, this would be a review for you, because in the last videos that I showed to you, we actually calculated the FIFO method. So this is just a review of the FIFO method, how you get equivalent units. If the beginning inventory was 60% complete as far as conversion was concerned, then remember we had to take the complement of this to get the conversion equivalent units for our beginning inventory. So the complement of 60% is 40% that we would multiply by the 10,000 whole units. That gives us 4,000 in conversion equivalent units. The materials equivalent units was 0 because all the materials are added at the beginning of the process. They already had all of the materials added last period in the FIFO method. So we didn't need any in this method to finish off those units. We knew that we started and completed. If we started and completed 70,000 units, all of them have materials and all of them have conversion. Then you add the two of these together, and then we work on our ending inventory. Our ending inventory has all the materials added, so that is 100% of the 15,000 that we've got here, but they're 80% completed this period for conversion. So we had to multiply 15,000 times 80%, and that will give you 12,000. So when you combine the two of these together, your total equivalent units for your materials is equal to what we got up here. The equivalent units for conversion is equal to what we got up here. So all of this was just to prove what this was stating. You did not have to do any of this. What they wanted is just the answers of 85,000. That would be the materials cost per equivalent unit using the FIFO method, and the conversion equivalent units cost per equivalent unit is 86,000 for the FIFO method. So they kind of had you going all over the place with this what if analysis. If you do not understand the what if analysis, don't worry too much about that. What I do want you to worry about is calculating equivalent units using the weighted average method. I want you to know that your whole units will be the same whether you use the weighted average method or the FIFO method. So let's move to the next exercise, which is 610. In this exercise, we're going to add the cost information to the unit information. In other words, we're going to do an entire cost of production report using the weighted average method. So this time we're going to be the Morrison Company. and they had equivalent unit schedule cost information for their sewing department. And this time it's going to be for the month of December. And notice what they've shown you here were the units that you finished and transferred out of work in process. This was given. The ending work in process was 100% complete with respect to materials, because all the materials are added at the beginning of the process. For the conversion, the ending inventory was not completed. They only finished 45% during this period of time. So if you multiply the 10,000 whole units of ending inventory times 45%, that's how they're coming up with 4,500 units that are conversion units here. And the equivalent unit output would be the two of these added together. And this is how Cengage set it up. Then they showed you the cost. So right here, I know it says conversion cost, but that's not necessarily true. It's really conversion units that they're talking about on this part right here. The conversion cost start, or these are the actual cost of the period. These are the cost of the period. And notice the cost of the period was given to you, the beginning work in process, direct materials amount was 66,000. The beginning work in process conversion amount was 14,000. In other words, the beginning inventory costs were 80,000, which is your 66,000 plus the $14,000. Your current costs for this period were given. The direct materials current cost was 550,000. The conversion current period cost was 184,000, and your total current cost are 734,000. These two combined are your total current cost. Now in the requirements, what they want you to do is to calculate the unit cost for December using the weighted average method. And so what I felt like it was easiest to do was to get you to prepare a cost of production report so you would know where these numbers are coming from. Now in Cengage, they didn't ask you to do a cost of production report, but I feel it's necessary that you know how to do the cost of production report so that you can answer their questions about the what if analysis and all kinds of things that they throw at you. So go ahead and learn the format for the weighted average method. And the format for the weighted average method starts out just the same as it does for the FIFO method. Now, the only thing they have told us about the FIFO method so far is this part of the whole units portion. They really don't even tell us the beginning inventory units in this problem. Notice that they started with the units that were completed. So the only thing you know is your units completed and your ending inventory units. So the units completed were 45,000. So in other words, when you write all this down, you're not going to have any of the information except units transferred and ending inventory. And that'll give you a starting point here. So this 45,000 units transferred was given. The units that you completed are 45,000 with respect to materials and conversion. So the whole units completed are 45,000. The ending inventory units, the whole units, was 10,000. Notice 10,000 was complete with respect to materials, but 10,000 was not complete with respect to conversion. But these are your ending inventory units, and this is the whole units that I plugged in right here. So if you know units transferred and you know the ending inventory units, you add the two of them together, and that gives you 55,000, which is your total units to be assigned cost. When we know this amount, we can also plug that in here. So this is our first thing that we would have figured out, is that the total units to account for has to be equal to the total units to assign cost. And the rest of this information here, you don't know at this point in time. The only thing they gave you was 45,000 of units transferred and your ending inventory whole units. So you can find the total units to be assigned cost, and you can find the total units to account for. Because they didn't give you the beginning inventory units or what you started and completed or the started units, work with what you've got. And the equivalent units for the weighted average method, you only need the units that were transferred and the ending inventory units. So for your weighted average method, the units transferred are the units that you're through with for this period of time, are coming out of the work in process account. And the materials that went into those 45,000 units that were completely finished and transferred out was 45,000. The conversion units was also 45,000. This was given. The ending inventory was 10,000 whole units. To find the materials, since they're all added at the beginning of the process, 10,000 times 100% is 10,000 units. So that's how we get this figure right here. And the 10,000 times the 45% that was not completed with respect to conversion is how we get the 4,500 here. The two of these combined give you your equivalent units. The two of these combined give you the equivalent units. This is materials equivalent units, and this is conversion equivalent units. Now, the cost information that you were given is the beginning work in process cost. The beginning work in process cost you were given right here at 66,000. You were also given the conversion beginning information, beginning inventory cost. The conversion costs were 14,000. And if you add the two together, the total beginning inventory cost is 80,000. The costs for this period are 55,000, 550,000, which was given for materials, and 184,000, which was also given for conversion. So this information basically right here is given. And then you would simply add the beginning inventory plus what you incurred during this period together to get the total cost to account for your materials and the total cost to account for your conversion. These two are added together and these two are added together. And these are the total across. This is the total across, and these two added together are 814,000. All of this information was basically given right in here. Once you know what your total cost for your materials are, you're going to divide it by your equivalent units. So what they're doing right here is just telling you how to determine your cost per equivalent unit for that period. So if we take 55,000, which was our equivalent units, and divide it by the total cost of our materials. Remember, in the weighted average method, all of our beginning inventory costs are combined with our current period's cost to find the total materials cost. That's different from the FIFO method, because the FIFO method kept up with their beginning inventory costs separately from their current period cost. But the weighted average method throws it all together. And so your beginning inventory cost plus your materials cost for current period gives you total materials cost for that period of time of 616,000, which divided by the equivalent units for materials will end up being the cost per equivalent unit for materials, which is $11.20. For conversion, our conversion cost beginning inventory plus our conversion cost for this current period added together is $198,000. We're going to divide that by our conversion equivalent units of 49,500, and that will give us $4 as our cost per equivalent unit for conversion. Now, what your problem asks you for in Cengage is they ask you for the total cost, which is a combination of your materials cost plus your conversion cost. These two added together are $15.20. So all of this information right here that was written down is just so you can calculate the cost per equivalent unit using the weighted average method. Again, in the weighted average method, we're combining our beginning inventory cost from last period with our cost, beginning inventory cost of this period. You combine them together and determine the equivalent units, the cost per equivalent unit based on the combination of what happened last period with what's happening currently. We're combining them together here. So moving back down to the cost to be accounted for, in the weighted average method, we're just concerned with the units that we transferred. Remember, we transferred out 45,000 units. But to find the cost of those units transferred, we would have to multiply the 45,000 units times the cost per equivalent unit, which was $11.20, and that will give you 504,000. So again, this 504,000 is found by taking our units transferred for materials times the materials cost per equivalent unit. The units transferred for conversion were also 45,000 units. So 45,000 units times the conversion cost per unit, which is $4, is what will give you the cost of the conversion cost for the units that were transferred. It would give you the total conversion cost for the units transferred at 180,000. Once you know what your materials cost are and your conversion cost are, you can combine them together to get the total cost of your units transferred. So the total cost of the units transferred is $684,000. To find your ending inventory cost for your materials, you start with the ending inventory materials equivalent units. Or actually, you start with the ending inventory amount of materials, which was 100% of the materials were added at the beginning of the process. So in other words, 10,000 times $11.20 will give you 112,000. For your conversion, your 4,500 units times the $4 conversion cost per unit will give you 18,000. So ending inventory is 112,000 plus 18,000. The ending inventory cost is 130,000, which combined with what you transferred out, that would give you the total cost to account for of 814,000. Notice this equals this amount up here. It has to reconcile back to this amount. So in step 2, this is what they ask you for in Cengage. So since you've done the cost of production report, you have all these items from the cost of production report. So they wanted to know what the cost of the goods transferred out is. And the cost of the goods transferred out is $684,000. So you just bring that down here. The cost of the ending inventory was $130,000. The total cost is $814,000. We just brought this information down here to answer what Cengage wanted you to answer. So I'm requiring you to do the cost of production report, because if you do that, then it's easy to pick out what the costs are for this period of time. And notice they also wanted you to pick up the cost to account for. And starting with your beginning inventory cost, which was 80,000, that comes from here. It's just brought down. The current costs were 734,000. That was the cost that were given to you from up above. You combine the two of these together, and that gives you the total cost. So in part 3, there's another what if analysis. And again, sometimes the what if analysis are really trying to make you think about what you have done in the past as far as FIFO and weighted average method are concerned. And this one's no different. They're saying, what if you were asked to show the weighted average unit cost for materials is the blend of the November unit materials cost and the December unit materials cost. And then they give you all this information, because before, they didn't give you anything except for what was going on with the weighted average method. Now, if you're doing a blend of last period's units with this period's units, then you're going to have to take into consideration what would have happened with FIFO, as well as what would have happened with the weighted average method. The November unit materials cost is $6.60. We find that by taking the beginning inventory cost from November, this was given, and we're going to divide it by 10,000 units. Now, this is your beginning inventory units. And you might remember from above when we were doing the whole units, I said we didn't have the beginning inventory units, but they actually give it to us in part 3 so that we can go back and it will help us to determine what they wanted us to do in the what if analysis. So if you know that this is 10,000 and we figured before that this 55,000 has to be the same as this, then we can work backwards and know what the unit started and received was. If we know the beginning inventory here and we knew our units transferred, we can determine what we have started and completed as far as units are concerned. So 666,000 is coming from what was given in the information above for beginning inventory. We're going to divide it by 10,000 that they just told us is our beginning inventory units. So $6.60 would be the materials cost for November. For December, the materials cost would be 550,000. That's what we incurred in December. But we're going to divide it by our equivalent units for our materials, which is 45,000. And they just gave that to us. The equivalent units in the beginning work in process are 10,000. Again, they gave it to us there. And the FIFO equivalent units are 45,000. They just repeated what they've already given us in this information. Calculate the weighted average unit cost using the weights defined as the proportion of the total units completed from each source. And they got beginning work in process output and the current output. Do not round your interim calculations, and if required, round to the nearest cent. Now, this is a long formula of what they're doing here. They're taking their beginning inventory units, beginning work in process units, using the FIFO method, which was 10,000, that was given to us, divided by the equivalent units of weighted average method, which is 55,000. That's what we found previously, times the November's material cost that they gave to us, plus the equivalent units for the FIFO method, which were 45,000 that was given, divided by the equivalent units that were for the weighted average method, which are 55,000 times December's cost, which was given. And I know that's kind of a long formula, but that kind of spells it out for you as good as I could possibly get it for you. Then I restated it just to try to simplify what I put up here so you'll know what was going on. And so to simplify this, what they simply did is they took 10,000 divided by 55,000 and multiplied it by $6.60. Then they're adding to that the 45,000 divided by 55,000 times the $12.22. So I just restated it and tried to simplify it for you in case this was too complicated for you. And I also further tried to explain it by listing all the steps in here. So the following information that I put down here is used to explain this what if analysis. First of all, they calculated the equivalent units using the weighted average method. The units transferred plus our beginning inventory units is going to be the equivalent units for materials. Now notice this is only asking for this amount using materials. They're not using the conversion portion of this, only the materials. And so that's why I'm just showing you the materials here. So this 10,000 is coming from the FIFO method, 10,000 units that was given in the what if analysis. This 55,000 is what we figured up above for the weighted average method. And they're trying to make a blend out of the cost for both of the months. So this was the previous month, and this is the current month that we've got here. The 45,000 were your equivalent units for the FIFO method. Your 55,000 is your weighted average method. This $12.22 was given to you right there. So that was for December, and this was for November. That's the given amounts that came in right there and here. So all this is a blend of the November unit materials cost and the December unit materials cost. And the amount is $11.20, which is this amount rounded. All right, in the next problem, we're going to do something completely different. Now, class, if this what if analysis bothers you, don't worry about it. What I want you to know how to do is the cost of production report, this part here, from line 24 down to line 59. I want you to learn that because that's the cost of production report. The rest of this is just what Cengage wanted you to pull out of that report. It's very important that you learn the cost of production report using the weighted average method and the cost of production report using the FIFO method, and to be able to compare the differences between them. The only difference between the weighted average method and the FIFO method is that in the weighted average method, they combine the beginning inventory cost with the current period cost. Whereas the FIFO method kept it separate. Last month in the FIFO method's cost were last month's cost. The current month and the previous month are kept separate in the FIFO method. So I'm going to move on to the next exercise, which is about journal entries, kind of give you a break from the cost of production reports for a moment. But those cost of production reports are really what this chapter is about. So learn the cost of production report for the FIFO method, learn the cost of production report for the weighted average method. The journal entries that they want you to prepare for Shorts Company. The Shorts Company has 3 departments: mixing, an encapsulating department, and a bottling department. At the beginning of the year, there was no work in process or finished goods inventory. So there's no beginning inventory in work in process or finished goods. The following data was available for the month of July, and they've given you the mixing department's costs that were added during the month of July, and then they've given you the ending inventory for the work in process. So the mixing department, we had some costs that were added to the mixing department of $86,400, and the ending inventory in the mixing department is $21,600. And so what I wanted to do is I wanted to start off with the T accounts. And because they told you there was no beginning balance in your departments, I first of all wrote in a beginning balance for work in process Remember, work in process is an asset account. It's going to have a debit balance. So beginning balance is 0 for work in process for each one of the departments. And there were 3 departments: mixing, encapsulating, and bottling. Then I wrote down what they told us about the mixing department. You see, they had some cost added of $86,400. So I put that as a debit to my work in process account. They told us that we had an ending balance, so I plugged that in as my ending balance. So if we know what our costs were and we know what the ending balance is, we can subtract the ending balance from the cost, and that will give us what we transferred to the encapsulating department. So from the mixing department, we transferred to the encapsulating department this $64,800. There was no beginning inventory in encapsulating. We received this from mixing, and we also had some costs that we added from encapsulating, which was $79,200. That was the given amount here for encapsulating. They also gave us the ending balance. So what you have to determine is what you transferred to the next department. So it's going to go from encapsulating to the bottling department. And to determine this $126,000, we added our beginning inventory plus what we received from mixing plus our cost, and then we subtract out the ending balance. And that leaves you with what you would transfer out of a work in process. Encapsulating, you're transferring out of the encapsulating department, and then you're going to put it into the bottling department. Do you see how we ended up debiting the bottling department from what we received from the encapsulating department? Again, there was no beginning inventory in bottling, but we received this from encapsulating. And then in our bottling department, the cost that we incurred were $72,000, and the ending inventory was $36,000. So beginning inventory plus what you received in plus your cost minus your ending balance tells you what you would transfer to finished goods. And finished goods had a 0 balance to start with, but we're receiving this from the bottling department at $194,400. It's easier to put these in T accounts first and then do your journal entries. That way you won't get confused. You can see here that we've got a credit to mixing and a debit to encapsulating. So we debited encapsulating and credited mixing for $64,800. Then we transferred from encapsulating to the bottling company. So bottling department. So we're going to debit our bottling department for $126,000, and we're going to credit our encapsulating department for $126,000. And then from the bottling department, we sent it to finished goods. Our finished goods is going to be debited for $194,400 because it's an asset account. And then we credit our work in process bottling for the amount that was transferred out. And that's all they wanted you to do in these 3 exercises. So I'm going to stop here for today, and I'll see you again next time. Bye-bye.